when we say Bitcoin is a hurdle rate, what I'm saying to corporations is that as a long run investor in your company, I'm putting you on notice that in the future, if you've deployed capital and you've underperformed Bitcoin, then my view is that you should be fired because you've underperformed your hurdle rate. I do believe that the first developed nation that acquires a massive stockpile of Bitcoin will be a winner in a major way and be a global superpower because of it. And I'm optimistic that the US will be that country. You can really just meme something into reality. And I think that's completely accurate. It was accurate when Strive first stood up against ESG and DEI, and everyone said, you're crazy, you're going against the wind, you're outdated, this has no chance of winning. And now ESG and DEI are on the outs in corporate America in a major way. Bitcoin is on the in a major way. And why? Because you create grassroots movements, and the power of the people is something that is really difficult to undo.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Matt, thanks for taking the time to sit down with us.
Good to see you, man. Glad to be here.
Absolutely. Great to connect again. I want to hear about like your journey before Bitcoin. We can start with there and then obviously definitely get into Bitcoin later. What did you do before you started working, at Strive? I think you were managing a large fixed income portfolio. Can you kind of tell us about that?
Yeah. So I went to college as a finance major and was trying to figure out where I wanted to start my career, debating going to Wall Street, name your investment place. Was I going to do equities, fixed income? Had no idea. I was a kid, right? And as I'm about to graduate, the great financial crisis happened and pensions around the United States, around the globe, became underfunded for the first time. And that was very personal for me, specifically in California, because pretty much my entire family worked for the state of California and they had their pensions tied to CalPERS. And so in the field of finance, there became no better personal mission for me than to try to help fix the underfunded pension crisis for the state of California, for all my family. And so I ended up joining CalPERS in their fixed income department. And that was my personal mission: maximize value, fix the underfunded pension crisis, and rose up the ranks from being a trader to one of their youngest portfolio managers ever, and was there for 16 years, 11 years doing portfolio management work. Had a very successful track record for 11 years straight. I outperformed my benchmark, so actively managed funds every single year. Generated, so I was managing about $70 billion of money at the end. And that was about one out of every $6, and made about $1 billion of alpha. So extra return over my benchmark, over my hurdle rate. And ended up being their top performing portfolio manager. But interestingly, realized, and there's a lot of different directions this can go, but realized I wasn't going to be able to fix the problem there, because as their top performing portfolio manager over 11 years, I made $1 billion of alpha and they were $200 billion underfunded. And so this is literally a scenario of picking up pennies in front of a steamroller, right? If you want to fill a hole that's 200 deep and in 11 years, you filled 1 out of 200. You do the math, maybe I could fill another 2 or 3 pennies the rest of my career. Not going to fix the problem. That ultimately had me end up leaving and joining Strive.
Awesome. Yeah, we're definitely going to get into Bitcoin as a hurdle rate and just hurdle rates in general. Back then, obviously, you weren't working with Bitcoin whatsoever. What was did you have a high level strategy of how you were going to generate that alpha, and like what kind of, assets were you buying, and how did you think about that at the time?
Yeah, so it was fixed income assets, and so I was in charge with a few different things. One of them was structured products, so taking some form of an asset like a residential mortgage or a commercial mortgage, slicing and dicing it, and then giving it to investors, which actually has some interesting connotations in Bitcoin actually as well, of structured Bitcoin now. But that's what I was doing on fixed income space, and then also U.S. treasuries. And so I was one of the larger buyers of U.S. treasuries in the United States, because CalPERS is the biggest pension fund in the United States, one of the biggest in the world. And so why that matters is that I'm sitting there as a U.S. Treasury buyer buying the debt of the United States. And think about as a Bitcoiner, one of you think about the first block of Bitcoin, talking about the bailouts of the banks and the printing of money, right? I'm sitting there looking at that even before I was a Bitcoiner as this problem that seemingly there's no solution. You just federal governments, the ECB, the Fed just kick the can down the road, print money, and that ultimately led me down to Bitcoin as the answer, but not initially. It was just this huge problem, and I don't see what the solution is.
Yeah, fascinating. How do some of the Bitcoin structured products, like I guess MicroStrategy and like STRK and maybe other things, convertible notes or whatnot, how do those compare to some of the structured products that you were working with back then?
So these ones are very different. Like the convertible notes, the STRK, the preferred equity. I actually think that there's room for a lot of innovation in structured credit, structured Bitcoin. And so why this is interesting is that the reason that structured credit and structured products exist in general is that if you can find a way to take some asset, slice it and dice it to where the pieces of the pie as a whole can be sold for more than the pie itself is one, then there's an opportunity. And so if you think about Bitcoin, just super simplistically, there's people that are ultra bullish on Bitcoin, and there's people that are interested in Bitcoin but afraid of the volatility. Just because there's those two types of people, you could create a product that fits the needs of each of them, where the ultra bull could make more money if they're right, and the worried one about that can't really handle the volatility can have some volatility protection. And so that's where I think there's a lot of room for taking a Bitcoin and creating better products for different risk profiles.
Yeah, no, that makes a lot of sense. When you first came across Bitcoin, like, do you remember the exact moment that you heard about it, and what was the catalyst for you to like hear about it and then also dive deeper into it?
Yeah, it's actually kind of a funny story, but I first heard about Bitcoin on a bodybuilding forum. So that probably made it substantially harder for me to actually accept that Bitcoin could be the answer to a lot of the problems that I saw, because I was going there to get fitness advice, and these bodybuilders were talking about Bitcoin, and I'm sitting here as an institutional investor, managing billions and billions of dollars, and there's no way in hell that these bodybuilders see some solution to this macro problem that I don't see as an institutional investor. Right? So kind of like, in a sense, like kind of like an ego, kind of like a statement, right? But I think it was a true statement at the time. And so this was probably 2012, somewhere in that neighborhood. And the reason I say that's because when I was aware of it during the run up of 2013 and 2014. And so I watched it run up, and it just looked at the time to me as the bubble of all bubbles, which is kind of funny, with it almost 100x higher now. But that was my perspective at the time. Then it crashes, and I figured I was right, that I knew it was worth nothing. Then just kind of went about my life, and not a Bitcoiner. And then in 2016, I just noticed the price action around Bitcoin, and it wasn't dying. It looked like it was forming a base, and that was not what I was expecting. And so I just made myself do the work to try to understand it. I wasn't bullish on it. I just figured I need to understand Bitcoin. And so I made a anonymous Twitter account, and interestingly, and I think this is still true in Bitcoin to the day, found any famous Bitcoiner was willing to engage with some anonymous account with no followers that was just interested in learning about Bitcoin. And so super helpful, did hundreds of hours of research and became orange pilled. And like many people that have had some sort of a similar journey, when you start to understand Bitcoin, you start to feel very short an asset that you're very bullish on. And so I ended up, investing at the time, basically throughout late 2016 or early 2017, and have been a Bitcoiner ever since.
Yeah, I forgot you told me about the bodybuilder form. That's pretty fun, or the whatever it was, pretty funny. Do you find that like dynamic interesting? Because it does kind of feel like throughout history, Bitcoin has been like a bottoms up adoption process to where the smart money or the institutional investors like are kind of slow and initially very dismissive of Bitcoin. Like, do you find that interesting, or how have you thought about that in general?
It's fascinating, and it's fascinating from the perspective of typically when there's a high risk opportunistic investment opportunity, the institutions, the wealthy get access to it, and the everyday person does not. Right. And then when they do, it's already made it super far down the path, right? And then and they invest it. And then everyday Americans or whoever can invest in it when a company goes public, right? And they're worth multi-billion dollars. Bitcoin was the exact opposite. It was everyday people, younger people with no money, but putting a few dollars in Bitcoin, and the exact opposite. And that's just completely a fascinating thing. And I think in many ways, I think AI is similar in the sense that I think it'll give more power to the individual actually over the institutions, just how much power people will have in the power of their cell phone through AI. I think these things are, there's a control version of the world around blockchain and AI. I say blockchain, not Bitcoin, right? Of CBDCs, and you saw this and you still see this somewhat to this day with the ECB and their framework on blockchain. But you saw so many CEOs of America several years over the last several years say, I'm a fan of blockchain, not Bitcoin, right? Or the blockchain technology is super interesting, and the blockchain technology through the form of a CBDC is a freedom reducer. Bitcoin's a freedom enhancer, right? And I think I'm more moving towards the realm of Bitcoin and AI and or just like blockchain broadly, because Bitcoin is the winner, being a freedom enhancer, and AI I think will likely be a freedom enhancer as well. And I think that's much better than the alternative.
Yeah, it's really interesting that you say that about AI because I think like most people in the past have said AI would be like a centralizing force. I just recorded a podcast the other day with a AI founder that started a small private AI company, and he actually says the same thing as you, where he actually thinks it might be a decentralizing force, which it would be great for the world. It's like two new technologies, Bitcoin and AI, that could actually be, really empowering the individual person and giving them more freedom and, power.
Yeah, so with the power of technology, and blockchain and AI are both technology, they can be used for either. They can be used for good or for bad, for freedom or for control, right? And in a certain sense, I think we were at the precipice over the last several years of the globe in the United States moving down the path of control over freedom in many different ways. And I think we're very lucky that freedom seems to be winning, and there seems to be this freedom movement, and you see Silicon Valley really getting involved in heavy ways in the current presidential administration in the United States. That did not have to be, right? It did not have to be that the United States deregulated Bitcoin in a major way, that we have a strategic Bitcoin reserve. Literally earlier this week, myself and many others were in DC for the Bitcoin for America event with senators, and a tweet that really stuck out to me was David Bailey. He put a tweet out there. You can really just meme something into reality, and I think that's completely accurate. It was accurate when Strive first stood up against ESG and DEI, and everyone said, "You're crazy. You're going against the wind. You're outdated. This has no chance of winning." And now ESG and DEI are on the outs in corporate America in a major way. Bitcoin is on the in a major way. And why? Because you create grassroots movements, and the power of the people is something that is really difficult to undo.
Yeah. And it seems like things are changing so fast. Like I remember last year when David Bailey was like, we might be able to get Trump at the Bitcoin conference. And people were like, no way. Even me, I was like, it'd be cool if he could come, but I doubt he'll actually come to that. And then now we're at like the United States has made a national strategic Bitcoin reserve. Like things change really fast.
Yeah, and it's easy to say, yeah, but they don't own that much Bitcoin or they're not actively buying yet, even though there's obviously a mandate to try to acquire more in a way that doesn't cost taxpayers money. But you have to just zoom out just a bit and just rewind a bit to even think where we are today and how much of a sea change that is. And of the view that the US needs to buy a bunch of Bitcoin and they should buy it as soon as possible, and that there really is a global race that I do believe that the first developed nation that acquires a massive stockpile of Bitcoin will be a winner in a major way and be a global superpower because of it. And I'm optimistic that the U.S. will be that country, but just the fact that we've gotten where we are is pretty extraordinary.
Yeah, absolutely. It does seem like we're like one more domino away from this really accelerating at a pretty unprecedented pace, but we'll see. Thinking about, convincing America to buy Bitcoin, you guys previously wrote a letter to GameStop trying to convince them to buy Bitcoin, and that actually got a lot of publicity. Can you kind of tell us about that letter?
Yeah. So we through our ETFs, we have 11 equity ETFs. Okay. They're all passively managed index funds. And so effectively we own 2,000-ish American corporations and then several international corporations as well. And we've always taken the belief that even though you're an index fund, you should be an activist to push corporations to maximize long run value. You shouldn't just be a quiet investor. You should push to maximize value. So we made a decision that we thought that Bitcoin and corporate adoption of Bitcoin was the best use of our activism over the next couple years at least. If every company puts Bitcoin on their treasury, on their balance sheet, then maybe there might be another top focus point for our activism, but always pushing companies to be the best version of themselves. And so as we're looking through our holdings, GameStop became the clear first target, and they became the clear first target there. We own positions of them in 3 of our ETFs. So our investors are long run holders of Bitcoin. They're not a retail investor looking for it to pop and sell and come out. Like if they pop, our investors are going to own even more GameStop for the long run. So like we need to think about how does GameStop maximize long run value to investors. And you look at this company and they're losing money. Even when they've shut down stores, they actually haven't reduced their loss. Like the percentage loss per dollar sold is just less losses because there's less stores. And so to me, it's just like they haven't fixed a structural problem. And the structural problem is that there's not enough demand for retail gaming stores on a national level like GameStop has. And so they have $5 billion of cash, a failing business, and we also knew that their company was considering putting cryptocurrencies on their corporate treasury. And so we had a company that we knew was looking in this direction, the perfect example case. And so we wrote a letter taking a first principled stance of what should this company do if they're really willing to transform their future and go all in on accepting what their current reality is and going all in on the Bitcoin standard. And so the letter was predicated on not just, but putting most of your $5 billion into Bitcoin, shutting down every single store that is not profitable and doesn't have a near-term path to profitability. So close almost all your stores. And then through the stock market, through additional issuance of equity securities, convertible bonds, buy more Bitcoin. And not though just to become the next MicroStrategy, but to actually still keep your mission in the gaming sector. That at some point in the future, maybe it's next month, maybe it's 5 years from now, maybe it's 10 years from now, you might deploy that money when you see the potential hurdle rate of deploying that Bitcoin to be higher than just holding the Bitcoin. That if you can earn it by acquiring a business or putting it into CapEx, that you do it. But you, by acquiring a war chest of Bitcoin, basically can breathe and sit back and think opportunistically from a position of strength than a position of weakness and just trying to not die with your failing brick and mortar retail shops.
Yeah. And I believe like Ryan Cohen, who's the CEO of GameStop, I think he previously and probably still does, I guess. He follows like three accounts. One's like Bitcoin Magazine, and GameStop. And so it seems like they could potentially actually listen to your letter. It'll be interesting to see what happens.
Yeah. My hope, and this is something that I think is one of the biggest challenges for corporate treasury adoption, is stakeholder management. So what I mean by that is, let's say you're the CEO and you're Ryan Cohen, and imagine Ryan Cohen actually, even if imagine he wants to do exactly what Strive's letter says. He needs to convince his board and his shareholders to actually do that. And if they don't want to and he does it, and he does such a strategic pivot, he's fired, right? And then they unwind it, and what's the point, right? Like, you actually need alignment from your shareholders and your board to actually execute a strategy. And so if he was struggling with that, or some other CEO was struggling with that, and Strive writes a letter and then it goes viral because the community thinks it's super interesting, we've just opened the Overton window of potential for that CEO to move in that direction in a major way, right? And so this is why activism is so important. It doesn't really matter if you're Strive with $2 billion, which, we're a super fast growing asset manager, but we're small compared to like a BlackRock with 10 trillion, right? Like we're small. But if BlackRock sends a letter to someone, or Strive, if a company wants to ignore it, they can. Like we can't force change. And so unfortunately, we are not going to convince likely Warren Buffett to buy Bitcoin. I would love to. I've thought it would be fun to send him a letter, but likely would not cause change. But for a CEO that actually, or a board member that actually wants to have change, and my prediction is probably at least one board member or executive member, a C-suite member of every public company in America is probably a Bitcoiner, because you probably have about, between them, 15 to 20 individuals. And 15 to 20 likely wealthy individuals probably have at least one Bitcoiner. And so if you have a Bitcoiner in a position of power in a company, Strive can be a strategic partner to help write a well thought out letter as a long-term investor that they could then take to their board meeting and show that investors do care about that. And we can do that privately, and we do that privately sometimes, because sometimes companies don't want the flashlight shine on them, but they just want to show that there is support for something. And sometimes they want the flashlight shone on them. So this is, in a sense, something I'm going to continue to say to get this out there to board members and CEOs, that Strive actually has a unique position to be helpful, is probably the only asset manager that has long run positions in 2,000 American companies that wants to help with Bitcoin treasury adoption.
Yeah. Do you think the companies that will adopt Bitcoin as a treasury reserve asset, will they continue to be like zombie failing type companies that are like, they have maybe a lot of cash and they're just looking for some sort of potential solution? Or will we ever see like a point where, successful companies are actually diversifying some of their treasury into Bitcoin? How do you think about that?
Mm-hmm. I think Bitcoin belongs on the balance sheet of every single public company. The question becomes how much and why. And so for a zombie company, it allows them to secure their financial future and live to see another day, and think opportunistically versus defensively. That's a powerful thing for a zombie company. Every zombie company should just go all in on acquiring the maximum war chest of Bitcoin that they can.
Secure your retirement with a Bitcoin IRA from Unchained. Right now, get started with no setup fees and enjoy your first year free. You can open a Roth and traditional Bitcoin IRA, and even upgrade old forgotten 401ks and IRAs into tax advantage Bitcoin where you control the keys. Get started today at unchained.com/frontier. There's no better way to hold tax advantage Bitcoin for decades. That's unchained.com/frontier. And now back to the show.
Companies like the Mag 7, Microsoft, or Apple, name your company that has some massive moat in their business and a lot of success and likely a lot of cash. they also should acquire a lot of Bitcoin, but for a different purpose actually. And this different purpose, I think the best argument comes down to the business risk of AI and AI advancement. And so if there was no AI advancement and you just had these businesses that were in super strong positions, they probably should just operate their business. They don't need actually any treasury war chest. Actually, like you just distribute profits to shareholders. But if you're entering a period of exponential innovation, which we are right now, that represents a material business risk to every single company in America and the globe. So business risk is at an extremely high rate in a way that's difficult to predict. And that's even the case for a company like a Microsoft or a Google that is investing in AI innovation. It's a risk for them too, because if AI does give the power back to the people in a major way, you likely will see the rise of these unicorn billion-dollar, one-person, three-people businesses that is going to disrupt the moats of these Mag 7 companies. And so if that's right, well, what needs to happen for these Mag 7 companies? They probably need to buy those businesses. And if your moat's been disrupted, then your stock price is probably going down because your moat's disrupted. And if you're in cash, it's a depreciating asset. Even if it's in U.S. Treasury, it has a negative real interest rate. So your cash position is dwindling. The value of your business is crashing. You're screwed in that scenario. If you acquire a war chest of Bitcoin, you now have an likely appreciating asset that you could then strategically deploy to rebolster your business moat by whatever transpires outside of your company.
Yeah, absolutely. You've also been talking about this idea of Bitcoin as a hurdle rate, which is kind of related to this whole discussion. For those that are watching and may not even know like what that means, can you kind of explain what that means and how you're thinking about it?
Mm-hmm. Yeah, so let's just describe the concept of a hurdle rate broadly, right? Because there should be a hurdle rate to deploy money for anything, right? If there isn't, then your business is likely going to fail. So businesses have hurdle rates, right? And so you can think about this current era that we're in as an era that I think we're actually leaving, but an era of easy money where the hurdle rate was, for all intents and purposes, negative. That cash has a negative real interest rate, and that's still true to this day, but at least there's some interest on US Treasuries, even though the real interest rate's likely still negative. And so when that type of environment exists, you really can think of holding cash as like a game of hot potato. You want to get rid of it as quickly as possible. And so that leads to all sorts of weird business decisions. The rise of stock buybacks, that's been a major rise across corporate America over the last decade or so, that companies will just buy back stock, use cash to buy back stock. They don't want to buy it. They'd rather just reinvest the proceeds in their company, right? We're now, in my view, entering a period of harder times where you're not going to just be able to do stock buybacks. You're going to actually need to think about acquiring a war chest of capital to some degree, and Bitcoin becomes the clear, scarce form of money that's likely to appreciate over the long run into the future. And when you start to see that, you can start to see a savings vehicle emerge. And when there was a lack of a savings vehicle in the globe, you have effectively bubbling conditions. With a savings vehicle, you can return to an era of austerity to say, it makes sense for me to save money, and I'm not going to deploy that money unless I think it'll earn more than what I could earn by just simply saving the money. And that's the concept of Bitcoin as the hurdle rate. And then the next question becomes, well, what is the actual hurdle rate of Bitcoin?
Yeah. Yeah, I'd be very curious to hear how you think about that. So, like, obviously, you want to make more Bitcoins. If Bitcoin is the hurdle rate, how do you think about the future performance of Bitcoin, I guess, priced in dollars? And then how would you go about actually trying to think about that?
Mm-hmm. So the first thing is to say that there's no right answer to that question. Everyone's going to have a different opinion, but this goes back to a core concept in portfolio management of active portfolio management. And that's my background, right? I used to be given a hurdle rate that I had to beat the future return of the Bloomberg Ag, which is a fixed income benchmark. What's the future return of the Bloomberg Ag? Or if you're an equity portfolio manager, what's the future return of the S&P 500? You don't know. That's why we pay you, right? And so I was, given a mandate to outperform that index. So if I didn't think I could outperform that index, I should just buy the index. Because if I underperform the index, I'm going to get fired, right? And so when we say Bitcoin is a hurdle rate, what I'm saying to corporations is that as a long run investor in your company, I'm putting you on notice that in the future, if you've deployed capital and you've underperformed Bitcoin, then my view is that you should be fired because you've underperformed your hurdle rate. Your job and why I'm paying you is to figure out what you think that return will be and to make sure that you will beat it. I don't have to define it. You're an active business portfolio manager making strategic decisions on behalf of your business, and your job is to outperform Bitcoin or just buy Bitcoin.
Yeah. I'm curious, have you talked to other like institutional investors that you may have worked with in the past and like brought this idea to them as well? Do they have an opinion on Bitcoin as a hurdle rate?
Mm-hmm. So institutions broadly, at least in the pension fund world, they haven't even bought Bitcoin themselves, right? So they've watched Bitcoin go from $0 to $100,000 or $80,000 today, and haven't bought any, haven't done for the most part the education to understand it. There's obviously outliers that we could point to, but for the most part, the industry does not understand it. And so they're not going to understand the concept of Bitcoin as a hurdle rate. Here's the thing for corporations. In a capitalist society, it doesn't matter if institutions understand, because if you ignore it, someone else won't ignore it, and they're going to become the strong company and they're going to eat your lunch. And so I don't think that the large asset managers understand this, that they support it. You saw this with the Microsoft vote. And so there was this shareholder proposal for Microsoft to put Bitcoin on their balance sheet, and the proposal didn't specifically say that, but it's important that you can't specifically say that in shareholder proposals. So you have to kind of hint at it to say research it, and research it basically means we want you to buy it, but we can't say it. So research if you should buy it. And 1% of investors at Microsoft, or less than 1%, voted yes. Strive voted yes. Or one of the less than 1%. This is very similar with regards to our fight versus ESG and DEI, where we would be, of the very, very, very few that would, vote for or against something based on our principles. But you can still make change, and this kind of gets into this activist approach, this grassroots movement. If we can create that grassroots movement and education, I do think in a few years from now, you will start to see adoption, and especially when the companies that do adopt become stronger. Capitalism works.
Do you see similarities between like the shift in ESG? I feel like 2020, maybe 2021 was like almost peak ESG, and now it seems to be kind of going away. Do you see that in Bitcoin too, where it's like no one's really paying attention with Bitcoin, but eventually everyone's going to start paying attention to Bitcoin?
Yeah, definitely on the corporate side and on the institutional side. It's not hard for me to see that the puck is moving here, and you can see it with regards to MicroStrategy, and then with regards to the rise of the smaller Bitcoin treasury companies. And so you're seeing a handful of these companies come about, other companies going public as Bitcoin treasury strategies, and it's almost going to be a forced adoption for other companies, because if you don't, and different companies in each sector just start to rise in market cap with Bitcoin war chests, well, a couple different things can happen. Either the other companies get on board, or if as AI starts to disrupt them, they probably get acquired by the Bitcoin treasury companies in the future for pennies on the dollar. So one way or another, You either get acquired by a Bitcoin treasury company or you become one yourself. I think the adoption will happen over the next few years, but I do still think it's early. It's early for Bitcoin treasury adoption, and the early adopters in every sector will benefit in major ways over the long run. And I think that's part of the reason why you see a premium for these companies of trading above their Bitcoin holdings, because they're in very, very strong positions in their various sectors.
Yeah, that makes sense. In the previous question, I really like the way you phrase the Bitcoin hurdle rate. And it's almost like if people looked back, over any significant amount of time period, whether you're an individual or business or institution allocating capital, it's like you're massively underperforming Bitcoin's hurdle rate. You're losing a lot of Bitcoins by doing whatever else you're doing, which is kind of fascinating.
Yeah, it is. And, I think we're at a place today where there's probably never been a better risk adjusted opportunity in Bitcoin, even though it's at much higher levels. And the simple way that I think about that is that I've always thought the biggest risk to Bitcoin was regulation, and regulatory risk has gone from substantial pre-election to almost to zero. And that change in risk, it makes sense to me, just like how when the strategic Bitcoin reserve was announced, that the price of Bitcoin doesn't need to skyrocket when a risk like that's reduced, because when the risk is reduced, you still need the large institutional flow of capital into the asset to, quote unquote, take it to the moon, right? And so it's the actual buying, just like how when the ETFs went live, well, we already knew that the ETFs were going to go live, but the success of the Bitcoin ETFs and the amount of capital that they actually ended up buying, it was not a sell the news moment. It was a buy the news moment, and just let it play out. I think you have to let the fact that regulation risk has gone to near zero, and the United States has a Bitcoin strategic reserve, and beyond that, just use your imaginations from a game theory perspective, what that means for other nations, and the tailwinds are really strong for the asset.
I think I heard someone say this the other day. It's like you don't buy Bitcoin because of some event or something, like an ETF event happens or a strategic reserve happens. You buy Bitcoin because its fundamentals are so sound that future events and future announcements are going to happen because people are just going to want to buy Bitcoin because it's a better form of money or capital.
Yeah, and these different events will unlock larger pools of capital, and you're seeing that more and more play out.
Yeah, absolutely. How do you think about Bitcoin's like very extreme volatility, right? Like obviously its returns historically have been massive, but in the short term, it can, it could be up 20%, it could be down 20%. How do you think about that, especially in the context of like using Bitcoin as a hurdle rate?
I think about an asset that has very high returns and near zero volatility, and I think that's a Ponzi. Doesn't exist. It's Bernie Madoff.
Yeah.
If you want access to extremely high returns, it almost by definition has to come with high volatility. There's a potential in the future where Bitcoin's volatility could go down. That will likely be it will by definition be at a stable price. Then Bitcoin is the stable coin, right? Right, where, whatever, for name your Satoshis, you can buy a dozen eggs, right? That is not the scenario that we're in right now, right? Where Bitcoin is capital, it's a savings vehicle, and that volatility, you always have to look at it in risk adjusted returns. And on a risk adjusted basis, buying Bitcoin has been extremely high and extremely good decision. So you can think about this as, even as like on our wealth management side of the business, where we look at the efficient frontier. So like in a diversified portfolio with stocks, bonds, alternative assets, and then potentially with Bitcoin, so the two portfolios, one portfolio with Bitcoin, one without, you can earn with just standard modern portfolio theory, a higher risk adjusted return by allocating Bitcoin. So you can be afraid of the volatility, but for the same amount of risk, the same amount of volatility, you can earn more return.
when companies are buying Bitcoin, like GameStop potentially could be buying with their existing cash. MicroStrategy takes an extreme approach and borrows money and buys Bitcoin. How do you think about that dynamic? Like, should companies go out there and issue like convertible notes to buy more Bitcoin? Is that too risky? Does it depend on the company, like you mentioned? How do you think about like leverage in Bitcoin in general?
So I don't think of leverage as a four-letter word, but it can be if you have too much of it. And this gets into the concept of kind of the lack of understanding of Bitcoin, also the lack of understanding of a company like MicroStrategy and what they're doing. It's very simple for Jason Calacanis to say MicroStrategy's over levered, it's super risky, it's going to break. My question to him is, okay, explain to me how it's going to break. You can break MicroStrategy, to be clear. I can give you a scenario that I think MicroStrategy's investors, they may not go bankrupt, but their investors will effectively be wiped out. But then you have to say, well, what is that scenario? And then secondarily, what likelihood do you think there is that that scenario plays out? That's the risk of MicroStrategy when you do those two things. And so it's one thing to say they have a bunch of leverage. Okay, well, what is their leverage? And is their leverage, let's say, 20 to 25% of their Bitcoin? Okay, that's step one, right? That's not crazy leverage in my view. And then that debt is laddered maturities, right? It's not callable. So every given year, only some fraction of that debt is due. So maybe in 1 year, 5% of the value of their Bitcoin holdings is due. So what that means is that they would be in a very bad position if Bitcoin was down 95% and their convertible bond is due. Well, if I'm an investor and I say, okay, well, if I lose 95% versus 100%, is that much different? Not really. I mean, you've basically lost everything in either scenario. Not materially different risks in my view, and especially in a scenario that's near a 0% probability. And so you always have to think about how do you break something. And I think that most people that would call MicroStrategy over levered could not explain how you break it. And so that's a critical question and a critical thing to understand. Otherwise you're just talking out of both sides of your mouth.
Yeah, I definitely agree. Like most people don't really understand like how conservative they actually have been and likely will be into the future. It's also kind of funny like thinking about real estate where, it's very normal for a person to put 20% down and effectively go like 5x long 5x long US real estate or 10% down, go 10x long US real estate. Like that's real estate's a little less volatile obviously, but still that's a lot of leverage.
Mm-hmm. It is a lot of leverage. And yeah, I do though think that you could have too much leverage in a Bitcoin treasury strategy. I just don't think that that's what MicroStrategy has done.
So if Bitcoin is the new hurdle rate, what do you think that implies for like equity valuations or the valuations of various assets in the future?
Yes, if you're pricing something in Bitcoin, it's a difficult thing to do, but if you do and you're constructive on Bitcoin, then most equities are likely overvalued. And this gets into inflation in a sense, in that there's different ways you can measure inflation. You can look at CPI, which has all sorts of crazy adjustments. I think a better version of just basic inflation is trueflation, which holds things constant and has been a more accurate version, which by the way is actually really low right now. But then you could say, okay, well that's one way to think about it. Just what's the price of a dozen eggs? And the second is like, what is the ability for someone to buy a house, to save for retirement, to secure their financial future, and look broader than just a basket of eggs and a grocery basket, but financial assets, the price of a home, the price of the S&P 500. And that then starts to get into the concept of the amount of money, M2 supply. And so Milton Friedman used to say that if you print money, that's inflation. And I agree with that concept. And so when you think about it that way, then the price of the increase of the stock market and the housing market as a percentage of the increase in monetary supply has actually been substantially less impressive, but also likely fueled by the printing of money. And so the printing of money has directly fueled a massive increase in housing prices and stock prices. And I almost hesitate to say bubble because bubble would imply that they should go back down in dollar terms. And I actually don't know that I don't even actually have that view. I just think they're higher because we've printed money. Inflation of asset prices. And so that gets back to Bitcoin. And if you think about things priced in Bitcoin, then they start to look expensive as a general statement.
Yeah. And I feel like most people out there, at least people that I talk to that are like not in Bitcoin, but they're interested in investing or whatnot, they feel like everything is overvalued. Like homes feel overvalued, or companies, if you look at like the Schiller PE, it's massively overvalued. And they're like, it should crash. They keep thinking it should crash, but it's like maybe it will crash, like its valuation will crash, but maybe in dollar terms, it could just keep going up, exactly like you said.
Yeah, it's a difficult scenario and one that I'm looking forward to the day, and I'm actually optimistic that we in the future, maybe our kids could have the day where a single person, male or female, could work and support a family and have a house and have kids. I actually think that we would be better off as a society if there was the ability to live flourishing lives with less jobs. Actually, less jobs, not more jobs. And I think that AI and Bitcoin adoption can drive that future, and that's that angst that you're talking about when you say people look at the prices of things and they say I can't afford it. That's showing a broken system, and that I think people could agree with that even if they're not a Bitcoiner, that we have a broken system today that does not allow for prosperity for the average American.
Do you think a higher hurdle rate could make the world more productive? Like in the sense that if the hurdle rate is super low, people could be out digging holes and then just refilling them for businesses, basically.
You say people, do you mean U.S. government workers?
Yeah, potentially. Yeah, exactly. So like, do you think a very high hurdle rate or a higher hurdle rate than the fake low hurdle rate effectively will be good for society in addition to just maybe good for the family, but like make the world more productive?
Absolutely. And so there's multiple dimensions of this. There's a hurdle rate, if it's too low for corporations, will fuel unproductive workers, unproductive uses of capital. Uh, Probably private companies, unless they have government contracts, not just digging holes and refilling them, although they probably do when they have government contracts, but fuels more productivity. And this also gets into even removing government workers that are in unproductive jobs. And so I dealt with this a lot when I worked for the state of California. And you effectively couldn't fire someone. You could under very, very certain circumstances that likely the person should have been fired like 10 years ago and they did something really, really bad, but mostly you couldn't fire someone. So it creates a scenario where you have workers that for whatever reason just don't work out at any company. And the best thing to do for both them and for the company is to actually let go of them. And then they'll go find something where they're more productive and likely are more happy because they're probably not happy working in an environment where they're not having success. But when you can't fire them, they in the state of California, this is literally true. You would have people that are effectively in the corner of different office buildings that have probably 1 to 5 hours of actual work to do, basically, and work that's not even important, but just something that they have to do so they have something. And then they're just actually sitting there, almost like a prisoner, on their phone, on Reddit, or name your whatever they're trying to do, just trying to pretend like they're doing something. And I know people that do this, and the hard part for them is it's that they have a job, maybe they have a family, they feel like they can't make a decision to leave that job and take a risk for their family. So they almost feel like by being a prisoner in for their career. They're doing the right thing for themselves, but they're actually doing the wrong thing for society at large, and ultimately the wrong thing for themselves versus actually taking a little bit of a risk. So I do think that a higher hurdle rate will fuel productivity in a massive way. And productivity could be, to go back to a previous point, someone not working and raising a family. I think that's an extremely productive thing for our world when you look at fertility rates right now.
Yeah, I completely agree. Do you think we'll reach a point where boards out there are like, why have you not been buying Bitcoin? Like, you as an executive really need to make this decision to allocate at least some of your treasury to Bitcoin. You've been ignoring it for a very long time. And will it ever get to that point, you think?
Well, with investors, we will, because Strive is an investor, right? And we're saying that already to corporations. The hard part is, if you're a CEO and you want to buy Bitcoin, you likely need board approval.
Yeah.
And so, it's kind of a chicken and the egg. Like the board could ask the CEO, like, have you thought about buying Bitcoin? And my guess is that CEOs that want to buy Bitcoin would meet resistance from their boards today. And so I think I don't think boards will hold CEOs accountable, likely ever, absent a few scenarios, but at least Strive as an investor will be holding both boards and CEOs accountable.
Yeah, makes sense. If 5 to 10 years from now, Strive is very successful in convincing, companies to adopt Bitcoin as a treasury reserve asset, what does the world look like? Is it going to be very different from today?
Yeah, I do think that in 10 years, almost every company in the S&P 500 will own Bitcoin on their balance sheet. The problem will be that the bottom decile, the last adopters, are going to be doing so from desperation versus opportunistically. And so right now, it's an opportunity to position yourself for strength, and in the future it'll be a move out of desperation to not die. And so we'll evolve our activism approach accordingly over time. But yeah, I do think I think 10 years is the time frame.
Yeah, makes sense. Two more questions and we can start to close it out. What's something that you believe that many Bitcoiners would disagree with?
Many Bitcoiners would disagree. That's a good question.
Yeah. These last two are kind of difficult sometimes.
Yeah. Well, I don't know if many Bitcoiners would disagree with it. Some would. I don't think every company should become a MicroStrategy.
Yeah.
I actually think that operating businesses are extremely important, and that we don't want to just shut down every operating business. And so while I do think we move to a Bitcoin future, how you think about corporate adoption of Bitcoin should be very different from one company to the next. And it really is a case by case basis.
Yeah. Last one. What do you think is the biggest risk to Bitcoin?
I hate to say this, but I actually don't see a major risk. I think I don't, I would probably say quantum computing, but I don't actually view it as a major risk. I think it's going to work out just fine, but that probably would be the biggest risk. But and this kind of gets into how can you be so constructive about Bitcoin if the biggest risk is something that you discount heavily and you don't think is as big of a risk as maybe even the market thinks it is, then you're just going to be very constructive on the asset.
Yeah, makes sense. Well, Matt, thanks so much for taking the time to sit down with us. This was awesome.
Thanks for having me. It was fun.